Hey everyone, my name's Andy with Finding Value Finance. I'll be your host today. We've got Kasper with us, aka Uselink INV on Twitter and on YouTube. This is his, I don't even know how many times he's been on here. It's quite a few. So
10
thanks for
plus.
coming
Yeah.
on, Kasper. Appreciate it. Coming on the channel.
Yeah. Thank you, Andy. And as I've been saying many times, I enjoy to be on your show. It's been like 2 years since I was on first time. And I think we are 11, 12 time plus minus maybe a few. So it's always nice to talk to a fellow technical guy. So
Hmm.
that's good.
Yeah, so I wanted to bring you on, wanted to see what you're seeing in the markets. And I'm going to leave it pretty open. You can share whatever you want. What are you following? What looks good? What looks bad in the markets at this time? What are you seeing out there?
Yeah, well, as you know, and probably also your followers, we had the first rate cut in a very long time. So everything is again at that point in time, every time they started to cut, at some point in time thereafter, we have had the big downtrend. Will that happen again? Probably because it's very, very, with a high percentage chance that is the case. But the market has actually ripped, quite a bit here. Again, it's only like 3 days since it happened, or three trading days since it happened. Um, but again, the dollar was hit pretty hard. We can go in and check in on that at a moment here. And then, like we talked about in the pre-show, again, people, we might be crying wolf, but again, I think silver, where it closed weekly, monthly here. I mean, anytime that thing could go north very, very quickly and do what it does. Only 5% of the time it goes vertical. The other 95, it's basically a lot of pain and waiting and doing nothing. And yeah, mostly to the downside. So very excited there. And I also think that some of the soft commodities, sugar, coffee, is in for a big long-term move, similar to what we saw on sugar, excuse me, cocoa, like a year ago or half a year ago, which was also a commodity that I mentioned on Twitter that, hey, cocoa is about to do a serious move. I didn't expect it to be that fast, to be honest, because I had a longer time frame, but it just went vertical straight off the bat, no pulling back. I sold way too early. I sold at the previous all-time high, waiting for a pullback. It never came. It just ripped. So um, not saying that coffee or sugar will have the same kind of move, but definitely there are potentially many multiples waiting on sugar and coffee. So
Hmm. Yeah, I think sugar trades very similarly to silver, right? Those two are somewhat
yeah,
correlated.
yeah, they are very correlated, not one to one, but they have a high correlation if you were to do the overlay. So yeah, for sure, and uh,
Hmm.
and yeah, it makes sense, right? We talked about silver potentially moving, and sugar looks really great on the long term, which we can have a look at.
Sure, let's dive in. Let's
We
look
can
at
have
it.
a look at. I will share. Just let me know when you can see it. I hope you can.
Yeah, we're good.
Cool. So this is actually sugar on a very, very long time frame. We are going back to 1970 almost. So we're talking like 50 years plus minus. And if we remove some of the short-term stuff here, this is basically a half a decade worth of macro setup here. You can clearly see that we are basically starting to squeeze heavily. And it is my take that we will have a break here, within the next year or so on sugar. And if we zoom in, this is the monthly, so you have every candle is like 22 trading days. Zooming in here, you can also see that ever since we tagged the upper golden resistance here, that basically you had a major falling wedge into that. That's always a very bullish sign. So we were resisted, and ever since we came down and we are breaking again, basically going vertical. So very soon we could see that break on sugar. And at that point in time, it's we're talking a 50-year basically base or a big macro setup that is about to get unleashed. And we are now at roughly, let's call it 30. And all-time highs is at 60. So that's a double. But again, these, if you measure the width here, there are different ways to do it. but if you measure the potential height here again, you could see many multiples on top of that. And yeah, I think cocoa did like a 7x in like half a year, and I wouldn't be surprised to see like a 3, 4, 5, 6, 7x also here in sugar very, very shortly, actually. So and everyone is talking about inflation has bottomed, but I can assure you that if the soft commodities starts to come again, that's when inflation starts to reignite, just like it did back in the 70s. So
Yeah, so when I look at this pattern, I mean, I see this thing, if it does break out, I mean, this could have a huge run, like a massive run.
oh yeah.
And the next question would be, what's the best way to play it? Because if it breaks out, I know a lot of people, I'm sure they're very interested in, it's like, well, if it breaks out and we get this gigantic move, how exactly do you play sugar? Do you play it like, is there like a sugar equity or ETF? I think there is. And then there's also, I don't know if there's individual companies that are more sugar related, but
I think there's one that's it's cane, but I can't remember if that's
mhm.
yeah, that's a fund here. That's one way to play it. I actually have some doodles on it here, and
It looks like a inverted head and shoulders or something.
yeah, it does. Yeah, it does with the tiny right shoulder
Yep.
here. Again, the same falling wedge like we talked about before that. And actually, we had a massive week here getting back into the purple channel here. So yeah, if we
Yep.
break the neckline, again, we can do like a measured move here. Again, not saying that it is going to happen, but this alone, again, we're talking like 200% for cane.
Yep.
Potentially, again, nothing is certain, but again, that's what we're looking at um, for cane here. So there are a few ways to do it. And again, you can also play the futures if you have access to that. You can play the futures contracts and so on.
Yep.
So yeah, sugar, stack it.
Yeah,
It
the
can
the
last
thing
a
that
long time.
kills the
So
most, I think it's the thing that kills the most people is probably sugar of
yeah,
anything that humans consume. But
yeah,
yeah, it
that's true.
looks like a huge breakout though. It's a good find, and it's like a breakout's just waiting to happen.
Yeah, yeah.
Um, what else are you seeing out there? So sugar looks really good.
Cocoa again, we can do the 50-year.
Mhm.
Again, I have like one trend line on this. There's more things going on, but again, this is the only thing that basically should be important. Again, we have re on top here. I think we will tag it a fourth time, a little bit of a pullback, and then also coffee is
Mhm.
on the way to do a again a slingshot of a move, as you often call it. Again, we have the bottom to the top there, so easily 400, 500, 600% in coffee, and uh, and just like they did on cocoa, they blamed it on some sort of disease or whatever they had in the crops. I don't know. But again, many people, in the charts were actually suggesting a year before, 2 years before that you had, the big breakout there for cocoa. So they will probably make up some excuse here as well. But basically, what it is, fiat destruction of purchasing power, basically. And yeah, this is just going to be one epic run. So we are talking potentially 2000 here in the coffee futures over, depending on the speed, a few years, right? It can go really quickly because as you can see, when it moves, it goes really fast, really, really fast. So
So I have to ask you, do you like sugar with your coffee?
actually, I do drink coffee, but I'm not using sugar anymore. I stopped that like 15 years ago.
Okay.
So
Well, now you're going to have to reintroduce it because you've got sugar, basically breaking out. You should probably pair it with this coffee because you've got two massive setups here
yeah,
that could both break out at the same time. And obviously, we had cocoa, which had that massive break and move higher. What's causing all this? I mean, is it just the value of the currency that we're measuring it against, or what's causing these things to just pop off like they've been doing? What's your guess there?
I think, of course, the destruction of purchasing power is one thing, but again, that doesn't happen. This is like 1 year, so you're not getting like 300% destruction, in that short
Right.
period of time. But I have like this little, I have this call it theory, whatever, conspiracy, that actually the futures market is created for the big banks, the big players to control the markets. But you can only control the markets for so long until it has to undo all the manipulation, you can say, has to blow off at some point in time. So that's just all the pressure, all the energy manipulation that is being built up here, and finally it's let go. So it's a mixture of
So,
both.
so then the next question I have is if this is being manipulated, um, where are the pressures? I mean, obviously we've identified coffee, or you have identified coffee. You've also identified sugar. Where else are those pressures building at this exact moment where we could just see things fly? Obviously, I'm probably leading you into a certain area,
Yeah, there is this
but
saying, as you might know, that where sugar goes, silver goes, or vice versa,
uh,
depending on
yeah,
your phrasing there. But as we talked about pre-show, silver closing above 31. Again, that was my closing level for Friday. And I also
mhm.
discussed with my members and also mentioned on Twitter that actually, again, it's not to sound hyperbole, anything, trying to hype anything, but I think right here, I think silver could start to do 5, 7%, 8% any tomorrow, or a week to come or 2 weeks. We are in that territory where one of the most heavy shorted commodities ever seen. It is the heavy shortest, I think, if I remember
It
correctly.
is the heaviest. It is.
All of a
Yep.
sudden, it could be every man for itself or every bank for itself, you can say. And then again, all bets are off. And the reason why I said 31 was my big level here is you can see here we actually had I think we discussed last time this previous stuff here, and ever since we actually created this purple resistance here, actually it's an expanding formation. We tagged it, pulled back to 30 roughly, and then we broke above the 31 again, clearing 31 roughly right here. So yeah, um, oops, excuse me.
Yeah. So silver
I
looks. This looks like so. Here's my quote, and I'll see if you agree with it. I would say of any setup at any time frame that I've ever watched the markets, I think silver is positioned right now for the most explosive upside of any potentially of any commodity that I've seen in the markets ever.
yeah,
Would you
I
have
agree.
that same take?
Yeah, I completely agree. We are about to finally have a big up leg here at the big cup and handle, the right
Yeah.
side of the handle here. And again, we could see 50 very quickly. And at that point in time, we will have a pullback. I know it could go to 40, maybe even 35. But again, it will be the third touch of that $50. And then on the fourth time, we will break. And I know people in the comment will say, yeah, we heard that last time. But again, it's it's really looking good here. Oh, I'm back again. I froze here. So yeah, silver is just an amazing
Mhm.
one to watch, and when it moves, it really moves. I can show you just what I mentioned with the 5% and the 95%. So you can see here whenever we break structures, we go vertical, right? We go vertical. So every time we have these big breaks, it's basically vertical time. We have broken the big one of them all here, really, and yeah, you can see that's. I mean,
Huge.
we are there again, in my opinion. So it's going to be exciting. Finally, I think we are very, very close. The closer we have ever been in silver. So
Here's some more comments. Warren Buffett has been offloading Bank of America shares like massively. He's just
big
dumping,
time, yeah.
dumping, dumping. Isn't Bank of America one of the banks that are heavily shorting silver? And I'm
I
wondering if there's any correlation between this silver setup that we are seeing that maybe Warren Buffett is probably seeing and saying, "Good luck with
yeah,
that."
yeah. Potentially, again, I know obviously he's the biggest or the greatest investor of all time, and he's you don't get to be in that position by not being able to be really good at managing your risks. So maybe, maybe not. Again, I don't know,
Yeah.
but yeah, there are 8 banks that are heavily, heavily short, and a few of those will probably have to bite a bullet or two when this happens. So
Here's another thing. Since this goes so vertical, And I know some people, they're gamblers out there. Um, would this be a good time to be starting to look at potential options on equities? I hardly ever play options. There's very small windows of opportunities in the markets where I would ever do a call option. Um, in your opinion, would this be one of those times? And I'm not stating that anyone who's listening to this should start to do call options based off of our opinions. But I'm just wondering, like, is this one of the times in history that you see or set up in history where maybe it warrants a little bit more risk taking than maybe other times in history? What's your opinions on that?
Again, I might be the wrong person for you to ask that because I have done very little when it comes to options. So again, I wouldn't
Okay,
really know. But again, when it comes to the underlying stocks, we can talk, the ETFs, for example, they are also looking absolutely fantastic. I think we can have a look at those as well. But again,
sure.
I don't know with regarding to the options. I wouldn't be able to give an answer to that because
Okay,
that's
no
not,
worries, no worries.
so
How about, yep. How about we start with, yeah, GDX, GDXJ, SILJ, or SIL? Yep.
yeah, I'm just going to remove, just to give a bit more clear view. Um, so you can see here, this is SIL, so that's the silver miners. They are lacking a fair bit compared to the GDX, but that's very common because they're usually a little bit more high leveraged. And basically, we have been ever since 2020, we have this red resistance here, which by the way is a parallel of this one here. Again, parallels, they work great. They're really good at framing the charts, and yeah, you can see we are actually trying to finally break through that level because we have 6 on top here, and we basically almost broke out here last week, but it's a doji, so
It's gonna rip. We have a
it
big fat
looks,
bullish engulfing with a little
yeah, a little
pullback.
tiny pause, and then we can
It's
easily
nothing.
blast
It's ready to
higher.
go.
Yeah, and also I have this again. It's not a theory, but again, based on charts, you're looking at the gold to silver ratio. If you invert that, you have the silver to gold ratio. And when that goes up heavily in favor of silver, again, back to the potential explosion in silver, that's when the mining sector in general is doing really, really well. We're talking copper, iron, silver, gold, uranium as well. So the mining sector, when you have that big outperformance by silver, that's when you see the mining sector in general just blasting on all cylinders, really. So yeah, really close to a major break here. Look for that roughly 36, 37 on the SIL, and then it's not looking back for a long time.
So based off where we are today, would you buy it right now or would you wait for the breakout to buy? I know I have my opinions, but what are your opinions on it?
If you haven't bought, again, there were opportunities, back when we broke this blue structure. That's a perfect buy. So it's not time to accumulate here. So I would play it as a breakout. That's my opinion. I would wait for the breakout above roughly 37, and then you can jump on. The
Mhm.
accumulation is probably over if you were to get them really cheap. Not saying that this is expensive, but again, the really cheap stuff you got in 2023, so at 2024, but early 2024. So
Okay. Okay.
so
What about the juniors? Like
the
SILJ?
juniors, yeah,
I see you got that up there.
yeah, it is basically, you can see this again. The juniors are even lacking the bigger players still because this is the overall resistance, and what we looked at before. If we were to make a reference here, basically what we were looking at on the SIL, we were basically right here waiting for that big move. So the juniors has broken the short-term stuff here, but same thing again here. You can see this level here. In this case, it's 13, which is also a level that goes back quite a bit on the horizontal. You can see it here. If we just make a quick draw here, that actually you can see that it has been acting as support and resistance ever since, and we are basically also on the verge of that breakout here. So they are quite correlated now, both waiting to break.
Yeah, I'm of the opinion that these will break pretty much no matter what, because I'm over there looking at gold. Gold's already ripping. Silver looks like it's ready to rip at any second. If I see silver
Yeah,
run, I would look at the juniors and anything that's lagging behind for potential investment opportunities. That's the way that I would view it. Do you view it the same way?
Yeah, I think we need that final confirmation of silver popping. Therefore, also the gold to silver ratio finally start to move down heavily. And then there are tons of of silver miners and gold miners who did have that initial pop in early 2024 and has been consolidating for like 3 4 months now, just waiting for that little bit of push to to send them higher. So yeah, um, yeah, I am on the same page there, I guess.
And GDX is further along than these guys because I think they've already broken out from what I understand,
Yeah, they
from
are. They
what I see.
are. They look fantastic. We have broken
Mhm.
a what's that? 13 years worth of trend line here. We have three on top. Again, usually you break on the fourth, and that's exactly what we did. We did also close above roughly, let's call it 40 here, which was a legacy support and resistance zone level going back many years, and we are basically breaking out retesting. The path for me, the least resistance is roughly the upper here. Again, this is the short-term target of roughly 70, you can say, which also aligns with the all-time high, roughly. So there is so much more to come if we follow this path here. And you can see, uh, again, the path of least resistance is there are basically no resistance above us here. And the long-term, my long-term mixed moving average is also about to slowly turn up here. So it's not the worst looking view, finally, for the miners. That's pretty good.
Well, what they say or what I think is gold generally leads these bull markets, which we're in those market conditions where gold's gonna rip. The soft commodities that you showed look like they're ready to go probably after gold is doing doing its thing. So do you think this is a lead in move for gold to some big commodity boom that comes after?
Yeah, I do think so. Uh, I think I can't remember who said it. I think it was Tavi Costa maybe that gold is the the precursor of the commodities when they move. So the gold is leading, and then it's pulling everything up, one at a time. So yeah, I completely agree that gold is actually showing what's about to come. And it's funny that everyone, at least in the mainstream media, is calling that the fight for inflation is over. But I would bet the contrary that we're actually at the bottom and we're finally going to turn again over the next years or two. So so yeah.
Do you think the move in gold, depending on the size of the move, will be the size of the move behind it in commodities? So are we seeing, so if we see a big move in gold here, do you think we're going to see a big move in commodities after?
Yes, I do. Again, so
Mhm.
some moves more than others, but the bigger the move in gold, we will definitely see, bigger move in again, potentially in silver, which is probably at our doorstep, but also soft commodities and yeah,
I got
I
you.
agree. I agree. I agree. Also
So what do
because
you,
gold, yeah, go ahead.
oh no, go for it.
No, just go ahead, Andy.
No, I was going to say, what do you have pulled up here? It looks like you've got GDXJ versus gold itself
Yeah,
in a very cheap
uh,
ratio.
exactly. Very cheap, and this is also going back to the highs of 2010 here. Again, very clean trend line. You can see we have been hugging it for the better part of like 4 years. And again, we are potentially about to pop here again, really early. But again, it doesn't take much you don't need much outperformance in the miners to start the move here. Let's call it like 10% outperformance. And the miners should be a better play than gold. Um, so yeah.
So here's my question. If we go back to the 2011 high that I see there, and gold goes from where we are today to $8,000 an ounce. So we get an 8x. What would your guess the juniors would do in an outperformance here if it does that? Because I mean that's a monstrous move for the mining companies. I mean that would be just an absolutely incredibly large move. Because
Yeah,
that
for
right
sure.
there, I mean that's I can't tell what that percentage is, but that is the outperformance against gold. And if
Yeah,
gold
exactly.
does a 3x or something like that, I mean that's
Yeah,
insane.
Yeah, I think again it depends on the timing of it. But if we say that the miners peak at the exact same time as gold, usually they don't, right? There might be some
Mhm.
lagging or leading, but let's say an absolute best case. Um, and again, I think 7,500 is also a number that I've mentioned to you a few times. That's not unrealistic by any means during this decade. So if they peak at the same time, you can actually see let's like a 5x outperformance of the miners. And you have to remember that during that period, gold is up from where are we now? Let's call it 2,600 to like 7,500, a 3x. So again, it's on top of that. So you again, miners could do insanely well if they peak at the same time, which they won't. But yeah, just for conversation purpose, that
Yeah,
is
so I
the
mean,
again just showing you that there is huge potential. So
so right now, what we should be doing, in my opinion, is going through the dumpster, looking at all of the, junior companies, silver juniors, gold juniors, like just combing through everything to find potential setups in the markets. Would you agree with that based off of what we've seen right here?
yeah, to some degree, I think in the early stage here of the potential outperformance that we will see, that actually I think the bigger miners will do better initially,
Mhm.
but then again, the juniors and the mid caps they will come and outperform heavily after that. But initially, we might have that big outperformance by the big players, just like we saw in uranium. For instance, we had Cameco, Kazatomprom do really well, and the mid caps are still lagging a bit here. That could potentially change, by the way. So I think again, you could play some rotation or just buy a few of the big ones and then pick your juniors and then just set it and forget it, and hopefully time your exit as good as you can, really. So.
Speaking of uranium, since you brought that up,
Hmm. What a
what's your
coincidence.
opinions on uranium at the moment?
I think we had a very, very interesting close for the U.UN. That's the Sprott Physical Uranium Trust on the TSX, the Canadian one. And I still think we are in the downtrend. However, like I also mentioned, I think I mentioned that last time I were on that September and August and September for uranium, we are probably going to climb a wall of worry, which we have done. And I will show you the U.UN because it's very, very, I want to go to the daily here. No, I want to stay at the weekly just very briefly. Um, this was the low back in March 2020, and we have basically been in an uptrend ever since. We're still within a very well-defined uptrend for the uranium commodity itself. Well, the U.UN, but that's basically 1-to-1 roughly to the spot price. And if we zoom in here, if we zoom in, I just want to remove the background because it's messing a bit there with the view, I guess. So we blow off top over here back in early of 2024, double top, rising wedge, that's bearish, right? And ever since we have been in this red here, this red falling channel wedge, it's slightly tightening. And I had a level to get above, which was 25, because that would mean that we were going to break the short-term downtrend here and get above the shorter term supply and demand zone at 25 roughly. So you can see here we have actually broken. It's more visible, I guess, on the Heikin-Ashi candle here. So we have been breaking here. And at that point in time, if we switch over to the spot price, and that's why I think it's a very interesting week that we're heading into, because if we start to see some buying coming into the spot physical, again, if we remove, just only have two lines on here, we are at a very heavy crossroad here where the long-term uptrend meets the short-term downtrend. And usually we have the bigger push again with the long-term trend here. So we should see, again, nothing is certain, we should see a pop up from this resistance coming down here. And again, if we start to see like a 2-3% here, then all of a sudden you have momentum behind it, and then you can see a move in the spot price. It should hopefully roll over to the miners, which has done really well the past 2 days. So yeah, I'm very much expecting and hoping to see the spot price coming up over the next week here and confirm that theory that with the 25 on the U.UM would result in a spike here in the spot price. So yeah, exciting for uranium.
Yeah, no one's looking.
No,
Everybody's too busy complaining about the underperformance of uranium on Twitter.
yeah, but again, uh, there is something to it. Again, the miners in relation to the commodity, some of the miners has done really well, obviously, but again, most of them, the miners in itself has done really well since the bottom of 2020, but in relation to the commodity, they have underperformed. And if you look at the ratio chart, you can also see that that is clearly the case. But um, since you brought that up, we can actually, I think, again, we can remove, again, showed this before. Again, it's still playing with us, but again, this is, the, until proven otherwise, the Vikov accumulation pattern here. When you measure the miners, the URA divided by the URNM. So this is potentially a 10-year chart of a Vikov accumulation in the making here. And yeah, we will have to wait and see, because this is a 10-year chart. So what happens in a week is basically noise, right? It's such a long time frame too. So, but again, if we can get roughly 5, 6, 7, 8% outperformance by the miners here in over the next few weeks, then I think the pattern has been confirmed. And if anyone want to look up Vikov accumulation pattern, you can do it on Google. You should see that this is actually pretty dead on.
Yep.
So yeah, long-term pattern. Again, people are getting bored. Yeah, people are getting bored.
It's gonna
But
rip.
again, yeah, it's hopefully again, if the gold to silver ratio starts to crash, I'm expecting the entire mining sector will do really well, insanely well.
Yeah.
So yeah.
Well, I think it's the ticker symbol, and it might be the first time you've ever seen this, XME. I think that's the materials
Oh yeah, yeah,
sector.
yeah, yeah, yeah. That's true. That's
I
true.
saw that
That's
on Twitter, and that looked pretty good. Like it was ready to, yeah, to keep
yeah,
going on higher.
yeah. So this is I think I read it before the description down here. It's like iron and a lot of metals, combined into
Yep.
one ETF. I don't know how it's combined, but again, it's probably a good way to look at the overall mining sector. And yeah, it
Yep.
has been breaking, big time here back in 2021 actually, and has been slowly grinding higher. So yeah, it's not the worst looking
Do you
thing
watch
really.
any dry bulk shipping or anything like that? Any like major indices that you watch or that you pull up?
Yeah, I can do that. I can do that.
Hmm.
The BDI. I actually just did the video for the members today on the weekly, because we watched the weekly. Well, we haven't done it in the past 2 weeks, but again, a weekly update on shipping. Because I
Hmm.
think sometimes you can get a great entry in a shipping stock that pays like 10, 15, 20% dividends. You can get a great entry and you can hold it for 2, 3 years, collect the dividends. It's a great sector sometimes. Um, and the Baltic Dry Index here, um, I don't want to put on the Bollinger Band because it's probably messes up a bit here. But again, we are extremely tight on the weekly Bollinger Band here, and either way it breaks, it's going to be a big move, no doubt about it, in my opinion. And so if we fall to the downside, the first big target is um, 1,300, and then potentially all the way down to here, right? 600 we could actually see on the BDI. Again, vice versa, you can see here that actually, if we break to the upside, you have the next big target, which is 3,300, and the big one is a double of that. So if you start to see a break here, basically getting above roughly 2,200 on the BDI, there will be a lot of great commodity companies. You can take a screenshot. These are the ones that I follow. There are many more that will do very well, and you will collect very good dividends. I know you have quite a few as well. So it's getting really tight here. Again, if we are to see that big recession again, let's see which way it goes, right? It's probably going to be potentially to the downside, but we shall see. But big move is expected here for the BDI once we resolve this blue wedge pattern here. So
Speaking of recession, since you brought it up, where do you think we're going to get a big pullback? Do you think that what are you seeing in the charts? Is there any evidence in the charts that you're seeing that you look across where you're like, wow, this actually scares me a little bit? Or are you looking at all these charts saying these are all bullish setups? what gives? So what's your opinion?
If we are to draw parallel to what happened in 2008, we also had the unemployment rate start to curl back up again. We had the 10-2 uninvert again, and we had gold starting to really climb. So there's a lot of things that says that again, at some point in time, we're going to have a big one for sure. But we have to wait and see. The timing of it can always be difficult. But yes, there is things that looks very, very sketchy. But again, when and how it happens, we basically have to wait and see. Uh, my my personal indicator is actually looking at Bitcoin. As long as Bitcoin is doing well, everything is fine, because that is, to me, that's the ultimate liquidity or excess liquidity indicator that there is. So that's what I'm using basically. So as long as Bitcoin is not crashing, I think the markets will do really fine. So
Out of everything that you follow in the markets, what is the best sector at this exact moment, in your opinion, and why?
personally, what we started out with in this video, and that's the precious metals. I think they look fantastic. They have been looking fantastic ever since early 2024, when we finally saw that break of 26 on the silver chart. That was also roughly when we broke what's it 2,100 on gold. The miners started to break out of some internal structures. So I think the precious metals looks really, really good, and we could potentially be in for some very, very, very good months for that sector. And also, I think palladium has bottomed. I think it confirmed that not last week, but the week before. And platinum is very close to get above my 1,050 to $1,100 level, and that's when the 4-year inverted head and shoulders pattern will finally break and also run to the upside. But for now, by far, gold and silver is the better play in my opinion. It really is.
And then conversely, what sector or sectors right now do you see in the market that look absolutely crap? Like what looks really bad out there where you look at it and you're just like, eh.
I have I I don't think I can, come up with a sector right now that looks really, really bad, to be honest. I mean, it's really a lot of the sectors, and you can go to the QQQ, the Nasdaq is really, it's not looking bad, but again, it's very elevated, but again, it can stay elevated for a long time, right? So I cannot come with a sector here right now that looks really, really bad, to be honest. Maybe if I were to give one, uh, potentially
The reason,
again, yeah, go ahead.
yeah, the reason I ask is if we were going to go into a recession and all these people are in a recession camp, shouldn't we be seeing evidence of stuff looking really crappy all over the market somewhere? Like, shouldn't we be seeing topping patterns? Maybe it's in like transportation or trucking or I don't know, something. But if we're not seeing any evidence of, like something looking like it's ready to break down, are we there yet?
Yeah, exactly. And
That's what I'm getting at.
yeah, it can go on for a long time, these elevated levels. But again, if maybe there's a precursor, but again, we're also looking, because we had that big technical breakdown here on oil. We had a 2-year wedge pattern that broke down. And now we're actually coming into quite an interesting moment where we touched the long-term support, and then now we're retesting that pattern. So if we start to get back in, all of a sudden you have a lot of people that are short that are getting caught on the wrong side, and then you have a big spike in oil. So, and
Slingshot.
again, yeah, exactly. And people called, recession here, but if we don't get the confirmation, all of a sudden you have a big move in oil and inflation will skyrocket again. So yeah, it's very, I think it's the most difficult. The past few months here has been the most difficult time to predict where it's going. Really, it has been all over the place. It's really difficult. So
Yeah, I probably hold a very similar viewpoint to what you just said before. I think gold, silver looks fantastic.
yeah,
And I'm waiting on oil here, same thing, to see if this breaks. Because if this breaks to the upside, everyone is caught on the wrong
on the
side
wrong
of this
side.
trade, and I will just laugh at them.
Yeah, yeah. But for now, it's doing exactly what we're expecting. We have a big break. We come into support. We retest that. So again,
Gotta
potentially
see.
we're going to roll over, or if we get back in and we can hold steady above 73, 74, maybe a little bit higher, I'm guessing there's a lot of people that are short that will start to get a little bit nervous, because then everyone's looking at each other, who's going to buy it back first, and then and I think the nail in the coffin will be if we clear this short-term wedge pattern here, the breakdown, getting back above. Then people are very scared all of a sudden. So, but for now, it's still textbook breakdown, retest, resumption. That's probably the most likely outcome, but we shall see.
Okay, what about the dollar? I know you mentioned the dollar earlier in the in this. What's going on there? We
I
have a
think I want
long way
to.
to fall, hopefully.
Uh, no, well, I'm just going to show you.
Or is it
It is
strengthening?
it is the dollar, but it is in relation to the inflation, right?
Oh, okay.
This is the monthly. Looking back, we're going back to 2008, 11 here, and you can see we're peaking below on the monthly. Um, and again, if you invert this chart, by the way, if we invert the Dixie divided by inflation, this is basically a similar view as to what gold what gold is looking like. So we can see here that actually inflation is winning against the dollar right now, and that's just a lot. That's just fuel on gold to go higher. And we can actually do the overlay if you want to, because yeah, I think gold has actually been front running this major breakdown here on gold. So I want to just go to log scale. We are here, invert that. So as you can see here, looking back 50 years, again, very highly correlated to each other. And you have actually, you can see here, if I'm, again, this is done very quickly, that gold has already been breaking out of its ceiling there, and now inflation is taking over the dollar, and gold is again ripping. So
Mhm.
gold knew exactly what was coming like 5 months ago, and yeah, here we are with a major technical breakdown. In this case, it's inverted, but a big technical breakdown in the dollar measured against inflation. And again, if we start to see the dollar go down here, like let's say like 10% against inflation, I mean, the purchasing power lost in the dollar is again is going to be detrimental to a lot of people. It really is going to be a really bad scenario for a lot of people, not only in the US but in Denmark, where I am, Germany, whatever. It's going to be, again,
Yeah,
that's yeah.
in 2001, 2002, we had the slowdown in 2001. They lowered interest rates, and that's when the dollar fell
Hmm.
precipitously against right there. You can see in 2002-ish. Yeah, right there at the tip there.
Yeah, and that's
That's
also
when
when
all
gold
of the
started to, yeah,
that's where we had the all commodity boom.
yeah,
Silver ripped, gold ripped,
platinum,
oil
everything, yeah.
absolutely smoked it. Everything jumped. Platinum was just ripping. To me, it looks like we're in the same exact situation to 2001 2 timeframe. What's your opinions there? Is it very similar, potentially?
I think it's actually a little bit more severe, because here we have like roughly 7 years, and here we have like 14. So again, this is
Okay.
a lot bigger breakdown all of a sudden, and again, you have a huge floor here, and again, that's just a lot of energy being built up, right? So this could be way worse than what we saw back in the lead up here to the big bull market in commodities back in 2002 into 2010, 11, depending on which commodity you were looking at. But yeah,
So when you say way worse, what does that mean in terms of like, do you expect gold to go up like even faster? Do you expect commodities to go up faster? Like, what do you mean by way worse because of
I mean,
the structure that's being broken?
way worse in the face of the dollar here. By the way, this is not only the dollar, this is the Dixie. So this is a mixture of a lot of euro and yen and the dollar and all sorts of stuff. So you will have a scenario where inflation is heavily winning against the fiat, where the fiats are losing a lot of purchasing power, and uh, and that's exactly what gold is tracking. That's the loss of purchasing power in any currency. So if gold again starts to move up higher and higher, it will lift up all commodities, because gold is the precursor of that. So I think we could be in for a again, the restart, you can say, of a big commodity leg up that started, with a big crash in 2020, and now we could be on the verge of that by only looking at gold, and gold has done a lot of heavy lifting. So each commodity could have, their own little spike, like we looked at on coffee. You can talk about gas, you can talk about oil. All of them will move, not at the same time, but individually, at some point in time, they will start to move and outperform each other. But overall, the entire commodity complex should be starting to move.
And another thing I want to make, like, so people are watching this, they're probably watching it and whatnot, thinking, the commodity bull market might have bottomed in 2020, but we didn't get this tailwind in 2020 with the dollar declining. That was like an ultimate bottom that came from such cheap valuations that that was like the bottom kind of lift off of ultimate bottom. This is a totally different scenario where you've got like hurricane force winds blowing at your back for commodities to go up in. Am I describing that right or not?
Yeah, I completely agree. And also, back here in when we had this big technical breakdown in the early 2000s, you had a somewhat healthy bond market at that point in time. So you had a lot of people also being able to, or knew that going into bonds were safe and all that. But I think that has changed in 2020 with that massive blow off top on the TLT. And therefore, I think there will still be people or institutions and all that going into TLT and the bonds. Of course, there will be. But I think, maybe a few of those guys will probably look at gold instead because it's a lot more safe. And I have also seen some charts. I think it's from Tavi Costa that gold is a lot more stable compared to the TLT for the first time in like 25 or 30 years. So gold is all of a sudden becoming a better play than TLT, which is basically, a US bond with regarding to volatility and risk. So gold is by far the best tier one play that there is right now. And I think there's only two tier ones, that is US bonds and gold. And gold is by far outperforming the bonds right now. And it's a
And
very tiny market.
I also think we were talking pre-show. You said we're right at the beginning of the show. You said you might want to bring up TTF and Dutch gas as well.
Yeah,
Did you want to touch on that?
we can
Yeah,
take that.
because yeah.
I know there's a lot of some short-term stuff going on here, but I think the main takeaway is that we have actually, again, this one doesn't go as far back as the nat gas does. But again, we have a very clear support and resistance trend line here. We tagged it twice for the double bottom, and now potentially we are in for the wind up structure here, and then we can break higher for gas. We are bull flagging right now, but I wouldn't be surprised to have a little bit of a dip, to have that fifth wave come in, and then we can go higher. But definitely the downtrend is over. Now we're going sideways. Now we just need to confirm the uptrend for nat gas. So yeah, that's also again with the energy. If we start to see uranium getting a little bit of tailwind, like we looked at before, gas potentially. What else do we have? Coal. I think coal looks coal looks very exciting as well. So it could be that we have that false breakdown on oil, and then you have the biggest four, energy, what's it called? Sectors, whatever. Yeah, all of a sudden they're doing really well. So again, that's inflation, just coming 18 months down the pike, if that is the case. So, and I think the only way that can stop it is if we have that big, nasty deflation event that usually comes when we have the Tencent token uninverting and all that. But until that's the case, they look really good as we speak of this day. So,
is there anything we haven't covered that I should have asked to cover that you see at the moment that you'd like to share?
On top of my head, no. There might be if I go through them, but again, I think we have covered a lot of good stuff here, and hopefully next time we are 35, $40 silver. It could go very quickly. And if we haven't, had takeoff at that point in time, I know that there will be people in the comments saying, "Ha, still." Like you were incorrect again, but again, every day goes by, and I'm more and more certain that we will get that 5% vertical move that we see only 5% of the time.
Okay.
So yeah.
Well, all right. I don't have anything else to ask. If people want to follow your work, reach out to you. How do they do it?
Yeah, thank you for asking, Andy. Again, on Twitter at Uselink INV. Same thing goes for YouTube and the Substack, Uselink INV. You can find me on all of them. And yeah, the Substack is definitely where I do all the daily updates on videos where we cover gold and silver, platinum, uranium, shipping, also a little bit of crypto from time to time, depending on how it looks. But personally, I haven't been in crypto since 2021. So, but we will do that at some point in time. I think crypto will look great again for a trade again. But right now it's not for me. But yeah, that's where you can find me if you want to hopefully make the best of this. What I think is still a great decade for the commodities. So
Okay. That's all we've got. Thanks
that's all
for
we got.
viewing. We'll see you next time. See ya.
Yeah. Bye.